Here are 4 investment ideas for you to consider during times of inflation. I'm Sal Diaz at Diaz-Bazan Asset Management. Let's jump in.
Floating rate bonds. Floating rate bonds adjust their payments every usually 6 months to whatever the interest rates are. So if you hear that interest rates are going up and there's inflation, this is the time to look into coupons that would adjust their payments every 6 months. You might ask yourself, why have I never heard of them before? And it's because since the late 90s, interest rates have been going down. Nobody wanted to buy a bond that would pay you less over time. But now that that's started to turn, you're starting to hear about interest rates going up, mortgages going up, then you should consider bonds that also have a coupon that could adjust with the rates as they go up. The second investment area that you should look into is looking for companies that have pricing power. Pricing power is the ability that a company has to raise their price without seeing a significant drop in their sales. A good example of this would be energy companies, because we consume their products on a daily basis and we have very little ability to change our consumption patterns. You might get upset every time you go to the pump and you fill up your tank and you see how much it is that you're paying, especially with prices going up. But we should turn around and look at that as an opportunity. The third area you should look into is commodities. A good example of this is U.S. agricultural farmland. In the U.S., specifically the Midwest, there's a lot of agriculture. Many people call it the breadbasket of the world. Now, just for comparison, back in the late 90s, here in Boston, I would go to the supermarket and buy a steak for about $6. A frying pan that I cooked in would be about $20. Fast forward 25 years, and now the frying pan's still about $20. However, the steak is getting there between $15 and $20 per steak. How many steaks does the average American consume in a year versus how many frying pans? Would you rather own a piece of the company that's making the frying pans, or would you own a piece of the company that owns the beef that is being consumed? The fourth investment area that I think you should look into are dividend-paying stocks. Dividend-paying companies pay a percentage of their profits back to shareholders every year in the form of dividends. These type of companies usually have what's called a dividend policy that states the amount of these profits that they have to pay back to shareholders. This dividend policy tends to act as a motivator for management to keep costs down, because they're very cautious not to cut the dividend because it tends to have a negative effect of the stock. What if the company is actually raising their dividends? Even better. It speaks very well of management and of the discipline that it takes to control their costs. I hope you found our tips useful, and if you have a comment or a question, please leave it in the comments below. Don't forget to subscribe so that you hear about our next video.